Welcome on back to Ferocious Education. This is Ed. Today I'm going to be talking about GNUS, Genius Brands International Incorporations. One of the stocks that I really didn't want to talk about for a while now, and the reason behind this is the amount of hype that is behind it. Usually when hype comes in, technical analysis goes a bit out of the window. And that's one of the dangerous things you got to be careful of. So I'm going to be just doing still a little bit of technical analysis here, as well as I'm going to be discussing about the news behind it. Just a little bit of different perspectives from my own experience and why I haven't got into this stock yet. So first things first, let's take a quick look into the average directional index. It's a little bit too high for me. It's a bit more unsustainable. I always say between 25 to 40, 45 is my sweet spot that I like it. Otherwise, it becomes in where reversals can be a bit difficult if it's going down to a trend, and if it originally was a green trend, that easily goes to red. Now, going to William percent R, which is a little bit different than RSI. The William percent R here is around 90.57, which means the stock is oversold. But you got to be careful because it's been oversold for quite a bit now. And so this oversold trend is always going to be there for as long as people are selling. And what am I looking at here is on the unbalanced volume. So you can see on the unbalanced volume here, you had the highest amount of people holding the bag here, and then it kind of decreased. So what we're sitting at right now looks to seem to be whether we might get a dead cat bounce later on, or it might go on a little bit into the red side. Now, when we're looking at the MACD, and I'm looking, by the way, at 1 month, 1 day, you can get to see that on here, we received a reversal where the signal line in MACD has gone over. And you can see that's the only green ticker so far. Now, it seems that the lines are going in apart in a stable rate, so that means this one might actually go on a little bit longer. So we'll need to look into the 1 hour timeline, try to figure out what's going to happen here. Now, in terms of momentum, it seems to be that it lost its initial momentum that got it to $11.73. So you can see over here the momentum is almost at a time where it was back in end of May. So when we were looking as well at different things like the moving averages, this looks beautiful, but that's also because it had a good run. It did go negative before, even though it had good averages. Now, what's the next thing we're looking at is that it's in a trader action zone. So if there was a reversal likely, it would happen in a trader action zone as well as Fibonacci retracement, moving averages, bandwidth, and maybe even VWAP. So we'll be taking a look at all that stuff. So in terms of a support, I can see a support going around 316. And I would say we're going to be looking at the 1 hour period here to try to be able to identify better supports. There we go. Sorry. Okay. This is a little bit sloppy. I'm going to be changing it to over here. All right. 1 month. Perfect. Fibonacci retracements. And around here. Wow, okay. So it's sitting really close to Fibonacci retracement. But we have seen before that it has rebounded from it, and then before it has just crossed through it. So that's something very important to take a quick look at. Ignore this white line. There's a trend line I'm going to show you in a little bit. But we can see that I would say the support is going to happen around closer to 355. But the actual support that has been registered before, I would say, is around 283 to around $3. So that's kind of the range you're looking at. So as it crosses 355, be very careful. It might actually continue on dipping to around $3 and maybe even $2.85. So it depends on your risk tolerance. So let's take Fibonacci retracement out, and let's go on to looking at the trend line. Look into the 3 months, 1 day. So you can see the trend line here, that it has followed quite a bit with the trend line, although it seems that it has not yet touched it or got closer to it. So there's a little bit of movement here, a bit in a positive direction. However, it has not yet tested that trend line. Once it tests it, that can become a little bit dangerous. Again, around 280. So it seems to be that there's good support coming in around the 280 region. Now let's look at the moving averages. So we can see that the moving averages are coming in very closer to the numbers here, although it has not been pulled back yet. VWAP is not available. Let's take a look into the 1 month, 1 day period. We can see at a closer scale that it has not been pulled back to the moving average, so I expect a little bit of even a darker pullback before any positive action. So let's take another look into the 5 days, 1 hour to try to look into the MACD. Alright, so we're seeing more of a stable negative. That's what I would consider it. So it's not really bleeding at a faster rate, but it's more of at a constant rate. So that might be a little bit of a bad sign for me because I don't see them crossing. So we can see the last time it has gone towards that kind of trend where the red has become towards the blue. In the aftermarket, it has corrected itself and it had a little bit of a gradient where it flipped that behavior. And that's very important to look at MACD. Now, it's not the only indicator that I look at. I look at different indicators, but that is definitely a warning sign for me. So let's now talk a little bit about the news that this company has heard. Now, it has had some previous press online, and that's all good and everything. However, I have to consider something into this company. It resembles a lot from a different company that I've heard before, Crackle. So this company, GNUS, gives a free platform that runs basically on ads, from my understanding. That can be amazing if you have exclusive with the exclusive content, which they do. So that's an upper side. Although I do remember a company bought by Sony, Crackle, that was sold out last year, and it wasn't that popular because it was, again, free, right? So that's not a source, an additional source of income where you get a bit more money to be invested in. So it's not like Netflix, for instance, and it's a little bit harder to see it go into a level of Disney Plus, since Disney Plus was more off selling content rather than leaving it for free. Now, it's a risky move from the company itself. So in terms of, we're talking about it to being like the next Disney or being a gigantic company, it's a little bit difficult to assess that in this situation. And it's a little bit hard to say, yes, this is the exact company going for this. So my play here is to be very cautious. Try to play the technical analysis in the short term. It might be a good hold. It might not test under 285, but as soon as it reaches closer to there, that is a very dangerous move for me. Now, in my own opinion, I wouldn't be touching the stock for one reason. It has already been hyped up. There's a lot of bag holders, and once these bag holders that are still coming in from the hype and bought around this region and hasn't met that price yet, they might be getting a little bit fed up from this company if it doesn't see a massive run. And the time they do, you might see a larger outflux of bag holders. So that's been just my opinion. Now, the company has given a lot of different profits here in terms of results. It has given a lot of cash for people. But the one thing that I would mention is not to get greedy. And I myself, I would not touch it. So that's been just a bit my opinion into it. In terms of technical analysis points, I've already shared it here, so you can make your own decision. Thank you and have a good day, and let me know what other tickers you want me to DD.